Hey everyone, welcome back to Corporate Decoder. Today MIACU just filed an 8K announcing the separate trading of shares and warrants, and I think this signals a key shift for the company. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing tells us the company is officially splitting its units into individual shares and warrants, which is a common move that often brings more clarity to the stock's valuation. So Meridian3 Industrials Acquisition Corp, or MIACU as you might know it, is letting holders of its IPO units choose to trade their Class A ordinary shares and their redeemable warrants separately. This isn't some massive strategic shift, but more of an administrative one that investors have been waiting for. Remember, when companies like MIACU go public through a SPAC, they often issue units. These units are essentially a package deal containing a share of the company and some warrants, which are like options to buy more shares later. In MIACU's case, each unit had one Class A ordinary share and half a redeemable warrant. Starting the 24th of August 2026, if you hold these units on the Nasdaq global market, you can tell your broker to split them apart. The original units will keep trading under the symbol MIACU. The individual Class A ordinary shares will trade as MIAC, and the whole warrants will trade as MIACW. Now, this separation is important because it allows investors to value the share and the warrant components independently. Before, you could only buy or sell them as a bundled unit. This move can often lead to more accurate pricing, as the market can now directly assess the value of the underlying share versus the potential upside from the warrants. The warrants are particularly interesting. Each whole warrant allows the holder to buy a Class A ordinary share at an exercise price of $11.5. This means if the company's stock price goes significantly above $11.5, those warrants could become quite valuable. The filing notes that no fractional warrants will be issued upon separation, so you'll only be dealing with whole warrants if you choose to split them. This is a standard procedure for many SPACs after their initial public offering. It is a sign that the company is moving towards its operational phase, where it will eventually need to find a business to acquire or merge with. The fact that they are enabling separate trading suggests they are preparing for more active market participation. While this filing doesn't contain detailed financial tables, it is crucial to understand the context. MIACU raised $201.25 million in its IPO back in August, aiming to merge with a company in the industrial sector. This separate trading announcement is a step towards unlocking the full potential of those IPO funds and making the company structure clearer for investors. The date of this report is the 21st of August 2026, and the separate trading is set to begin just a few days later on the 24th of August 2026. This quick turnaround highlights the readiness of the company and its transfer agent, Continental Stock Transfer and Trust Company, to facilitate this process. This filing with the Securities and Exchange Commission, or SEC, is a public record that details this important operational development. It's part of the ongoing transparency required for publicly traded companies. The earliest event reported here is the 21st of August 2026, the day this announcement was made. This sets the stage for the trading changes that will take effect on the 24th of August. This specific form, the 8K, is used to announce major corporate events that aren't part of the routine quarterly or annual financial reports. The separate trading of shares and warrants definitely falls into that category. Looking at the company itself, Meridian3 Industrials Acquisition Corp is a special purpose acquisition company, or SPAC. Their primary goal is to raise capital through an IPO and then use that money to acquire or merge with an existing private company. It's incorporated in the Cayman Islands, which is a common jurisdiction for SPACs, due to its established corporate laws and tax environment. The Class A ordinary shares are the main equity pieces of the company, and they have a very low par value, which is standard for many companies. The warrants are the other key component here. They represent a potential future claim on the company's shares, and their value is directly tied to how well the company performs, and whether its stock price exceeds that $11.5 exercise price. MIACU is identified as an emerging growth company. This status provides certain regulatory flexibilities, such as extended transition periods for complying with new accounting standards. This section of the 8K Item 8.01 specifically covers other events that are considered material to the company and its shareholders. The announcement about separate trading fits perfectly here. This is a critical point investors who don't want to separate their units don't have to. They can continue to hold and trade them as they did before under the original MIACU ticker. This preserves flexibility for those who are comfortable with the bundled structure or are waiting for more information about potential mergers. This is a practical detail that ensures clarity in trading. Imagine trying to trade half a warrant, it would complicate the market. By only allowing whole warrants to trade, they simplify the process and make it more efficient for everyone involved. So for investors who do want to split their units, there is a clear process outlined. They need to go through their broker, who will then coordinate with the company's transfer agent, Continental Stock Transfer, and Trust Company. This is standard procedure for managing corporate actions like unit splits. The filing also mentions an attached press release as Exhibit 99.1. This press release would contain the official announcement and likely more details for investors and the media. This section deals with the exhibits and financial statements attached to the filing. In this case, the main exhibit is the press release detailing the separate trading. Finally, the report is signed by Jeffrey H. Foster, the Chief Financial Officer of Meridian3 Industrials Acquisition Corp. This signifies the official endorsement of the filing by the company's management. So what does all this mean for MIACU? This move to allow separate trading of shares and warrants is a positive step towards increased transparency and potentially more efficient price discovery for the company's components. It simplifies the investment picture for shareholders. While this filing doesn't give us any hard financial numbers on the company's operational performance since it is a SPAC focused on future acquisition, it does signal progress in its structuring and readiness for its next phase. The risk, as with any SPAC, remains dependent on the quality of the eventual merger target. Without a deal announced, the individual share and warrant prices will largely track market sentiment towards SPACs in general and any whispers of potential acquisitions. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.